This is a debrief of Task 2 from the first sample assessment of personal tax. Task 2 tests income from employment, and many people find this quite a tricky task in the exam because there are lots of different types of benefits in kind with lots of different rules for each of them, and it's difficult to remember all of them. So let's look at the information we've been given. Dr. D and Miss B had the use of company cars during the tax year 2024-25. All necessary information in respect of each car is detailed below. So we've got quite a lot of information here, and in terms of exam technique we need to be careful not to get bogged down in all of this information because not all of it will necessarily be useful to begin with. So it's useful then just to sort of skip through this information and find out what the requirement is so that we can look at that table with purpose rather than try to absorb all of it. So part A asks us to complete the following table to show Dr. D and Miss B's taxable benefits in kind for the cars for the tax year. We need to show our monetary answers in whole pounds only. So it's asking us to do three things. So let's look first of all at the scale charge percentage. Now to be able to do this, we will need to use the reference materials. So here they are in section 7 of the reference materials, the car benefit percentage. So the question's asking us what is the scale charge, so we need to know what is this percentage on the right hand side of the table. So to be able to do that, we need to identify what are the carbon dioxide emissions for the petrol engines, but also if there may be some sort of hybrid, what is the electric range of the car. Notice that for diesel engines, there is an additional 4%, so we need to look out for that as well. So let's go back to the information in the question now. So we need to know what type of engines they are. So notice that for Miss B, that she has a diesel engine. And then for Dr. D, well, let's start off with Dr. D then. So we have a hybrid here with an electric range of 120 miles, and we've got the carbon dioxide emissions of 40 grams per kilometre. So using those two numbers, let's find out what the scale charge is. So the emissions were 40, weren't they? So 40 fits into these areas between 1 and 50, and then the scale charge will depend on the electric range, and in this case it told us that the electric range was 120 miles, so that gives us a 5% scale charge. So we can put that into our answer. So now we have that scale charge, we can work out the next part of the question. What is the taxable benefit for the provision of the car? And the way that we're going to do that, it's based on the list price of the car. So notice there's also been given the cost price, but we don't need that. The tax benefit is based on the list price. And in this case, we see that the employee has made a contribution to the cost of the car. So they've actually paid some money up front to have the car. But we need to be careful with this though, because the contribution in terms of tax purposes is capped at £5,000. So we can see that we've got this list price of 26,200. The employee provided some money up front, but we're going to cap that at 5,000, and therefore the value of the car for tax purposes is 21,200. And then we multiply that by the scale charge of 5%. And that gives us a taxable benefit of £1,060. Okay, so let's look at Miss B next. So we saw that Miss B has a diesel, but there's some additional information there though. It tells us that it meets a particular standard, and so we'll look at that in a moment. And we can also see that we have a high level of carbon dioxide emissions, 112 grams. So let's go and have a look at the scale charge for this. So this is a diesel engine, so we've got that 4% extra, although not if they meet this standard, which this car does. So in this case, we don't have to worry about that extra 4%. So the question told us that the carbon dioxide emissions were 112 grams per kilometre. So that's more than the 55. And the rule is that we're going to have a 16% scale charge, but we're going to add on an extra 1% for every extra 5 grams per kilometre above the 55 grams. So the way to do this then, we're going to take our 112 grams per kilometre, take away the 55, which is the number we've got in our calculation here, and that gives us 57. And then what we want to do then, because we need to increase it by 1% for extra 5 grams, so if we divide that 57 by 5, that gives us 11 plus a remainder of 2. And it's the 11 that we're interested in because that's the number that we're going to use for our extra 1%. So in this case then, we've got our 16 standard plus an extra 11, so our scale charge is 27%. So we can put that into our answer now. Our scale charge is 27%. And then we can also work out what our taxable benefit will be. Remember, we want to ignore the cost price. We're focusing on the list price of the 36,100. There was no capital contribution in this case, so we take that 36,100 and multiply by the 27%. But notice in this case that the car was only used for 8 months. So that means we need to time apportion this. We will pay 27% from the full year, but because it's only for 8 months, we're going to time apportion and multiply by 8/12. So in this case, that's going to give us 6,498. But this question is further complicated though, because it tells us that they are making a contribution for the use of the car of £120 per month. So notice the difference between these two different people. Dr. D was providing a capital contribution, so that 5,000 we deducted from the list price, but the second person is making a revenue contribution of 120 per month. So what we're going to do with that is that we're going to deduct that from the taxable benefit. So remember for 8 months, so we're going to deduct 8 amounts of 120. And then that gives us a taxable benefit of £5,538. The last part of this asks us for the taxable benefit on the fuel. So we can see that for Dr. D, they don't get any fuel in their job, but for Miss B, she does get some fuel. So information for the taxable benefit on car fuel is in the reference materials in section 8. So we can see that we have a base figure of 27,800. So we take that 27,800, we multiply by the same 27% scale charge that we had for the car. And remember, we've only had the car for 8 months. And that gives us a taxable benefit of £5,004. Let's move on to part B of the question. So we're told that below is a list of benefits that Z Limited provides to its employees. Enter the taxable benefit in kind for 24-25 for each of the benefits. Provide our answer in whole pounds only. If your answer is 0, enter 0. So notice the instructions we're given here. If we don't follow those instructions, then the computer-based exam software won't recognize your answer, and therefore you may not get a mark. So let's look at the first one then. So Mrs. L moved into a house provided by Z Limited on the 1st of January 2020, when its market value was £295,000. The house cost Z Limited £210,000 in April 2012. The house has an annual value of £7,200. Mrs. L pays Z Limited £500 per month towards the use of the house. So to answer this question, we need to look at section 11 in the reference materials, where it tells us that there is an expensive accommodation limit of £75,000. We also, for this question, need to know what is the HMR official rate, which is 2.25% for this year's exams. So to work out the taxable benefit in kind, we're going to take the market value of the house, that's the 295,000. We can deduct the expensive accommodation allowance, and then we multiply by the official rate of 2.25%, and that gives us a figure of 4950. Now on top of that, we need to add the annual value of the house, which is the 7,200, but we're also told that they're making a contribution of £500 per month towards the house. And that's a total of £6,000. So if the employee is making a contribution, then we don't need to tax that amount. So the total of these three figures give us 6,150, which is the taxable benefit in kind. The next one then, Mr. V moved 200 miles due to a promotion and received 9,500 to help with his removal expenses. So here's section 11 of the reference materials again, and we're looking for relocation. And then we can see, there we are, there's our relocation expenses. So there's an allowance of 8,000. So they've got a benefit of 9,500. We can take out the 8,000 that is tax-free, and therefore the taxable benefit in kind is the remaining 1,500. Next, Miss Q received an interest-free loan of £16,000 on the 1st of November 2024. This is the only loan she has received, and she has not repaid any of this loan. Now notice that there is a date in the text which is within the current tax year, and therefore we need to do some time apportioning. So just counting our fingers, we've got November, December, January, February, March. So that's going to be 5 months that Miss Q had the interest-free loan. Again, we need section 11 of the reference materials, and we're looking for interest-free loans, which we can see just a bit further down below. So up to £10,000 would be tax-free, but this is more than the £10,000, and therefore the full amount is taxable. So in this case, we don't deduct 10,000, it's not an allowance. Yeah, up to 10,000 is tax-free, but more than that, it's fully taxed. So we're going to take the £16,000 loan, multiply by the HMRC official rate, which we saw just now. Remember, we're time apportioning for the 5 months that Miss Q had the loan. And that gives us a total of £150 as the taxable benefit in kind. And finally, Mr. U received a watch for his 30-year long service award. This was Mr. Yu's only long service award, and the watch cost Z Limited £1,800. Here, section 11 of the reference materials again, and we're looking for long service awards. And we can see there towards the bottom of the screen, long service award for a non-cash one like this. It's a watch, and they get a tax-free allowance of £50 per year of service. So the taxable benefit is going to be the £1,800 value of the watch, but we can deduct £50 for every year of service, and we see there that the person worked for 30 years, so we deduct 1,500, and that gives us a taxable benefit of £300. So you see, for this question, it's really important that you use the information in the reference materials, but the reference materials aren't perfect. In some cases, the figures provided were thresholds for whether we're going to tax or not, and some of the figures are allowances which we deduct from the value of the benefit. So you still need to know what to do with the numbers that are presented in the tax reference materials. Then in part C of the question, we need to identify whether the following statements are true or false. So Miss F is a director of F Limited. She received a bonus of £2,500 on the 30th of April 2024, so that's in the tax year. The bonus was for the accounting year ended 31st of March 2024. Miss F will be taxed on the bonus during 24-25. Now, ordinarily, income would be taxed on a receipts basis. So because she received the bonus on the 30th of April 2024, which is in the 24-25 tax year, it would be taxed then. But because Mrs. F is a director of the company, then the income is taxed at the earliest of when the payment is made, which is the 30th of April, and the time when the person becomes entitled to the payment, and the bonus was for the accounting year ended 31st of March 2024, which is in the previous tax year. And on that basis, the answer is false. If Mrs. F would have been an employee, it would be true, but because she's a director, it's false. HPLC pays all its employees £5 per week for working from home, as all employees now work from home for part of the week. The employees will not be taxed on this allowance. So it's £5 per week. Let's have a look at the reference materials to help us with this. So we're looking at section 11 again, and if we scroll down towards the bottom, we can see there is a working from home allowance of £6 per week. So in this case, the £5 per week is less than the £6, and therefore it's going to be tax-free. So in this case, the answer is true. And finally, Mr. Y uses his own car for business purposes. His employer pays him 40p per mile during 24-25. Mr. Y claimed 15,000 business miles. So Mr. Y has an allowable expense of £250. So the reference materials help us here. We're looking at section 9 now. So for taxable purposes, for the first 10,000 miles, 45p per mile is tax-free, and then above the 10,000 miles, 25p per mile is tax-free. So let's compare how HMRC would do it to how the employer is doing it. So for HMRC, we've got the first 10,000 miles, and we pay 45p per mile for that, which gives us 4,500. And then there's a further 5,000 miles, because remember there's 15,000 miles in total, and HMRC would allow 25p per mile for that, which is another 1,250, which gives a total of 5,750. So that's the allowable expense from HMRC's point of view. Now the employer does it differently. The employer simply pays a fixed 40 pence per mile for each of the 15,000 miles, which gives 6,000. So that means the employer is paying £6,000 to Mr. Y, but only 5,750 is allowable. And therefore, Mr. Y needs to pay tax on the extra 250 being received. So it's not going to be an allowable expense. This is actually a taxable benefit. So that's going to be false.